Hey friends, how are you all? So today I'm going to be talking about capital market business analyst. How are people with any kind of experience in stocks or bonds or shares or investments or people who have accounting, financial degrees or any of those people, how can they become a business analyst in IT? Because IT pays really good and who has the expertise in capital market. I'm going to give you a few tips on how they can switch to IT business analyst in capital market. Okay, so my presentation is going to be initially, who are all this beneficial for? Initial discussion will be about that. And secondly, I will get into a few important keywords in capital markets so that whoever is not familiar, they can get familiar with it. And thirdly, I will conclude by mentioning what actions you should take. So if you want to become a IT business analyst in capital markets, because there's huge potential for anyone, even with a degree, even with just a degree holder who's passionate about capital markets, who's passionate about trading. As you know, nowadays, all the new kids and all the new people who are graduates, they're all really passionate about trading and capital market and investments and everything. So let's get straight into it. Just give me 1 second when I'm sharing my screen. Okay, here. Okay, very good. So let's get started. So who are all the potential beneficiaries here? So anyone who is has a degree in finance, or he or she is a CPA or CFA, or someone who has good knowledge about financial investment vehicles, like lots of investment vehicles are there. We know about bonds, stocks, and mutual funds, index funds. There are a lot of investment vehicles, and based on based on your passion, you are interested in one or the other. So for anyone who is interested in these investment vehicles, who is passionate about it, someone who is an experienced accounting professional. When I say accounting, I don't mean people who are just doing taxes, people who are giving accounting, people who are doing taxes, as well as giving financial advice to their clients. So when someone is giving financial advice about any investment product, as an accountant, you will get chance to give financial advice about different investment products. So certainly they will have an expertise on their investment product. It can be stocks or mutual funds, whatever they are advising to their clients on, they will gain expertise on it and they will gain domain knowledge about it. And then equity analyst. So someone who is advising their clients, they are the equity analysts who advise clients about different investment vehicles. They are called equity analysts. And investment advisors, who are working in the bank. Let's say when you're going to, let's say if you're going to Bank of America or going to ICICI Bank or any other bank, you see there are people who are giving you advice on different investment vehicles and different investment products. Those are the investment advisors. So when someone is working in a bank as an investment advisor, certainly some of them have to get their own, their own certification. So when they do the certification, they would have experience and they will have to learn about different investment vehicles. That's a start. So those people, once they're working in the bank for a few years and then they get bored of their career and they want to switch into IT as a business analyst, they can leverage their expertise to become a good business analyst in capital market. Accountants can do the same. Equity analysts can do the same. And for that matter, any degree holder who is passionate and who also has the knowledge about stocks, bonds, derivatives, and who is in the stock market for some time, at least like 1 or 2 years, when they spend time in stock market, they become familiar with different keywords that are being used, because without getting familiar with that, they cannot trade. So, and then the basic thing is they're passionate about it. So now when they're investing, it is not guaranteed that they can get consistent returns. So there might come a time in your career when you actually have to depend on consistent income. So you can leverage your expertise in the capital market and become a business analyst in IT in capital markets. That's when you will be able to convince the interviewer that you already have the experience because you already know all the keywords, you have the domain expertise, and then all you have to learn is a little bit of IT and the background, then you will be on the way to become a IT business analyst in capital markets with very good income. The reason why I took this topic is because there is huge potential for IT business analyst in capital markets. Okay, so then let's get into the next slide. So here, I'm just going to briefly explain about important keywords in capital markets. So what is a capital market, right? So capital market is let's take any company, for example. Let's take, for example, here I've taken a company, let's say Tata Bye-Bye. Tata Bye-Bye, TCS is like Tata Consultancy Service, right? So let's take Tata Bye-Bye Consultancy Service. Let's assume that that's a company that you started, Tata Bye-Bye Consultancy Service, right? So now your company is growing, and you want a bigger office. You want to expand your operations to different states or province, wherever you want. Now you want to hire new employees. You have lots of requirement for additional funding. So now, with the help of the bank, with the help of the investment bank, you as a business owner go to the bank and discuss with them what is the capital that you have, what is the expense that you have, how much is the required funds that you need in your business to grow your business. So you sit with the investment banker and they will advise you whether you should go for equity capital market or debt capital market. So equity capital market is when you decide to sell the shares of your own company. And when you sell the shares of your own company, the people who buy the shares, it can be laymen who are interested to invest in your company. It can be portfolio advisors. It can be mutual fund advisors. They are all like, once you decide to sell the shares, then they have an ownership in your company. So when they buy your shares, you get the income, you get the cash from them through the investment banks into your company for your investment. So that is equity capital market. Here you can see there's equity capital market and debt capital market. So debt capital market, the difference between equity capital market and debt capital market is that for debt capital market, company borrows money from other investors. So let's say to simplify this debt capital market, let me explain to you this way. Let's, for example, for the first one, we explained about selling shares of the company. The second one, let's say like you just take an example. You're just an individual. Now you decide to buy a house and you don't have enough money with you for down payment. So you go to your rich uncle or rich auntie or rich brother or who has money. Don't go to people who don't have money. So they lend you some money. So let's say you take $100,000 or 1 lakh rupees from them, right? So once you take that money, that is a debt that you own. So when it's an individual, it's an individual debt, whereas when it's a company, that debt is issued from the bank or from any other financial institution or from any other investor based on your credit rating. So if it's an individual, we look at the credit rating of the individual. Whereas if it's a company also has a credit rating. So based on that, the debt will be issued to you, and there will be a percentage of interest that you have to pay to the debtor. So in this case, let's say, let's say you get $100,000 for 3% or 3% or 4% or 5%. So every month you keep paying them the interest until the end of the term. That is a debt capital market. In both of these cases, what you're basically doing is you're basically getting money from another source so that you can expand your business, right? So that is a basic core of capital market. So once you have the money, you can expand your business. Now, there's another one which is called the seasoned equity offering. What is seasoned equity offering? Let's say your company, as your company, Tata Bye-Bye Consultancy Services, first you decided to sell 1 million shares of your company to accumulate, let's say, $10 million, right? Now, later on, you find that that $10 million is not sufficient. So you decide to do seasoned equity offering, which is when a publicly traded company wants to raise additional capital by selling more shares. That is called SEO. Well, you want to raise more capital than what you initially required. That's when we go for SEO. So these are all the key terms in capital market. And then capital budgeting. What is capital budgeting? Say as a company, you want to buy a new software. Let's say you want to buy a new ERP software, right? So, so this is a long-term investment. So capital budgeting is analyzing the inflow and outflow of cash for a particular investment and seeing if it is if it is feasible, if it's going to make long-term gains for the company. That is called capital budgeting. And I'm taking here an example of a software company, but let's say it's a construction company, right? So construction company is getting a new project, and that project is for $10 million. Then they do their analysis on what will be the expenses for construction materials, what to pay the employees, and to acquire the land and everything. And now they come up with capital budgeting and see if that is feasible or not. So basically, you calculate the cash inflow, cash outflow, and that's what capital budgeting is all about. Now let's talk about another topic, that is the three different markets in capital market. One is like already we discussed, is equity market. So equity market is about selling shares or ownership in the company. So for the buyer, this is more risky. Like, let's say this is more risky. This is considered more risky because if the company doesn't perform well, then the buyer of the shares or the owner or the people who are holding the shares is at a risk of losing more money. Whereas in debt capital market, this is the company is issuing bonds. So when the company issues bonds, they have to pay a certain percentage based on the predetermined percentage. They have to pay like 3 or 4 or 5%, and there is no more risk involved. It is very low risk because at the end of the bond term, the company has to pay off the remaining amount. So that is what debt capital market is all about. So especially debt capital market is more, let's say a city or a state or a province or a country like a federal government, they want to raise capital for some of their projects. So that's when they come up with bonds and they sell these bonds and they take the capital from all the investors and they keep paying them back interest until the end. That is what debt capital market is all about. And the last one is derivative market. What is derivative market? From the term itself, you can it's derived from these ones. It's derived from equity market or debt market or anything like that. So basically, options that option is a derivative of stocks. Basically, it's a contract that is being sold for the potential value of the underlying stock. That is option is option is a derivative of stocks. Similarly, feature market is also a derivative market. So those are the derivative markets. So these three are the ones that comes under capital markets. Now, also again in capital markets, we have primary and secondary markets. So what is primary markets? Primary market is new issue market. So I hope you all have heard about IPOs, which is called initial public offerings. Whenever a company first decides to sell their shares to public, the first time offering of securities, example IPO, this is called primary market. So this is a one-time event. And here I'm just taking the example, same thing. I'm taking Tata Bye-Bye, uh, consultancy services. Let's say they decide to, that's your company, and then you decide to go public by doing the IPO. So let's say you contact Bank of America, and then Bank of America, and then they have investment advisors. They would advise you either to go for debt, that either to sell debt that is either to do the bond, or to sell the shares, or to sell the bonds. So based on the company's balance sheet, how much of equity, how much of assets you have, how much of liabilities you have, what are all your operational costs. Considering all these factors, Bank of America, like investment advisors, or people who are working in people who are working in starting the IPOs, they are going to advise you whether to go for bonds or equities, right? So in this case, and the beneficiary will be the issuing corporation. In this case, it will be TBCS, right? So secondary market, what is secondary market? Any trading activity after the new issue, everything that is after new issue will be secondary market. So corporation that issues the security is not directly involved here, because let's say they decide to, corporation that is like, let's say TBCS decides to issue 1 million shares, and it's already out there for anyone to trade it. So that's already in the secondary market. So it's an ongoing event. People are buying and selling it. Investment advisors, mutual fund managers, they are buying it, selling it. So in this secondary market, the issuing corporation is not directly involved. Whereas in the primary market, the issuing corporation is directly involved. So those are the keywords that I wanted to bring to your attention while discussing about potential for business analysts in capital markets. Now I'm going to conclude about this presentation. So in concluding, what I would want to tell you is, so this is for so first of all, in knowledge of capital market keywords is must, like keywords like shares, bonds, other investment products, how the market works. So this is a must for you to become a IT business analyst in capital market. Secondly, what you need is research and analysis skills. Keep up with the emerging trends. They're like, for example, Bitcoin. Like a lot of people who are passionate about Bitcoin, they keep reading about it all the time. They have a domain expertise on it. They know about the market. So they can leverage their expertise to become an IT business analyst for a consistent salary. Right. That's what the whole point is about. I'm here trying to describe to you about the potential that you have when you want to leverage your expertise in a domain. So then the third point is additional skills that will help. Our communication skills is very important. I always keep telling that communication skills are very important. So let's say you're working as an investment advisor, or let's say you're working as an accountant. Let's say you just have a normal degree and you're working in the bank as a part-time sales agent for their investment products. So, and let's say you have passion for becoming a IT business analyst. So what you need to focus on is communication skills. Start focusing on it now, so that 6 months from now, you can get a job as a business analyst in IT. And then you can leverage your expertise in capital markets to become a IT business analyst in capital markets. And then soft skills. You need to concentrate on soft skills. Analytical skills are also very important. Excel is, I keep telling this all the time, Excel skills are very important for a business analyst. Now, let's say you go for an interview, right? Let's say after you do all your prep work and you're ready to attend the interview, you should mention that you're passionate about working in this sector, because the reason why I'm telling this, because there are lots of millions and millions of people who are actually very, very interested in the capital markets. They're passionate about stocks, they're passionate about trading, they are passionate about how the price is fluctuating based on different market scenarios. So when you go for an interview, mention that you're passionate about working in this sector. And I will be able to show dedication and perseverance, because when you say that, the interviewer is going to believe it, because certainly there are lots of people who are passionate about capital markets. That's why this will be important for you to mention. Secondly, observing stocks and predicting the future of predicting future of stock market movement is always very interesting to me. And if you mention this point, as you should mention this point as well, so that they know that you're passionate about it and you are interested in it. You're interested in various things going on in the capital market. So they will be convinced when you mention these things. What I also want to tell you is that when you're working as an IT business analyst, you don't need the skills and knowledge of stocks at your fingertips. You don't need that, because you're not an investment advisor. You're helping a corporation build their software. All you need is the expertise in the domain, so that when the business communicates to you, you know what to communicate to the developer, because the developer might be coming from a totally different background. He may be working, he or she may be working in Walmart as a developer, and now from Walmart he resigned and he came to your company. Let's say, like, your company. Let's say you're working in Bank of America. Now you're working with business analyst to develop software. So you don't need the stocks knowledge of stocks at your fingertips to be able to help the clients grow their portfolio. That's not what you need. So you don't need this skills of prudent judgment on the direction of stocks and movement and risk analysis, right? Because if you're an investment advisor, you need this. You need a prudent judgment on the direction of the stock market, and also how much risk the investor is taking. You need to know all this. You need to be good at this to become an investment advisor. Whereas when you're working as a business analyst in capital markets, you really don't need these skills. You don't need the skills on your fingertips about the values, about the fluctuation, about what is happening, what is the percentage of risk, and where the market is going to head. It's going to go down, or it's going to go up, it's going to be the same. You don't need those skills. All you need is the knowledge about the domain, expertise, and all the keywords. And that's what you